More jobs and unemployment up? Hey, this is Dave with the Bolduc Realty Group. Welcome to my weekly real estate market update. Today is June 9th. Happy Friday. Hope you guys have great plans for the weekend. Before we get into all this, please like, subscribe, ring the notification bell, comments, questions, always appreciated. Let's jump right into this now. Talking about the Connecticut key market stats. So we have 3,960 houses on the market today versus 3,977 last week. So a difference of 17, basically flat. We had 410 new listings over the last 24 hours. That's a nice addition, but what it's showing is that houses are still selling in Connecticut. We added 400 in the last 24 hours, and the week-to-week numbers are still pretty much the same. We had 3,225 closings in May. That's up from April, so that's good. But we still have 1.22 months of inventory based on the current inventory and the May sales. Interesting point, year over year home sales from May of 2022 to May of 2023, the prices are up 5% from 342,000 to 360,000 on average. So we are seeing some really good price appreciation right now. So some key dates here. Well, we got a big week coming up next week. We've got FOMC where the Fed meets. It's at the same time as when the CPI report comes out and then the PPI report comes out the next day. So the Fed is going to be meeting while they get real-time information about inflation in the economy. The jobs report last week, it was a mixed bag. We had a higher than expected jobless claims, and we also saw unexpectedly the unemployment rate jump from 3.4% to 3.7%. At the same time, we reported a higher than expected addition of jobs, 339,000 new jobs versus an expected 190,000. It seems like the job market is softening, so you're seeing that unemployment and the jobless claims go up. And these new jobs that we're talking about, they're really just replacing jobs that were lost during the shutdowns 2020, 2021. So it's going to be interesting to see how the Fed reacts to this as we go forward. Bottom line, in Connecticut, the real estate market remains strong. We have low inventory, we have relatively stronger demand, and we have home prices that are attractive to people that are coming in from out of state. There are other states, California, New York are good examples, that saw bigger run-ups than we had in prices. A lot of those people are selling, leaving those states, and Connecticut is a destination for them, and they're seeing prices that they consider lower. So something to keep in mind. As the market continues to soften, we'll see people come in. The problem there is for buyers in Connecticut, it does increase demand, and you're competing against someone who may have some cash in their pocket. So if you are a buyer, stay strong, stay in the market, keep going. You will find your house. My advice continues to be do what is right for you. If that means buy or sell, do it. Interest rates are high right now. They'll come down again. They will ease off. They go up and down. They're a tool that the Fed uses to influence the economy. Home prices continue to climb. There are dips. Even like right after 2008, there was a decent dip. We've gone back above that again. And if you look over history, they're not making any more land. So demand will continue to be there. Supply is limited. Home prices will continue to rise. You have a choice. And this is something I tell all my clients. Buy now if that's what works for you, or you can wait for a year and see what happens, and most likely you're going to see prices again are up. What do you think is the right move? Should you buy or sell now, or should you wait on the market to change? Let me know in the comments down below. For the primary mortgage market survey, we're at 6.71 from 6.79 last week. There's a lot of uncertainty in the economy around what the Fed's going to do, what's happening with the jobs, and all these things that we're talking about, especially inflation. And odds are, at least what the market is saying, is that the Fed is going to pause and hold off on a rate hike this month. Now, is that what's going to happen? I'm not sure. We have like I said earlier, the PPI and the CPI reports coming out while the Fed is meeting. If those two reports continue to show what we're seeing in the jobless or the job addition of 339,000 and also the PCE report, which said that inflation was staying around. If we continue to see more inflation, the Fed may say, you know what, let's hit it with another 25 basis point increase right now and then see what happens in July. I don't know. Either way, I think what's going to happen is over the next 2 months, there is going to be another raise. The question is whether it's in June or July. The key for lower interest rates is the Fed seeing inflation to get back down at least close to that 2% that is their target. Until that happens, we're going to continue to see the Fed being very aggressive, and we're going to continue to see interest rates higher because of it. That's what I have for today. Comments, questions are always appreciated. Have a great weekend.